I love it.
Let's talk about medical properties.
Let's talk about it. So there was a transaction, right? And that's what's interesting about it. MPW, for those who've been living under a rock or maybe just don't follow the REIT happenings as much as my two co-hosts here. MPW is the story in the REIT land, and it's definitely had the fall from grace. If you're looking for some hard-hitting drama, you could turn on Real Housewives, or you could go to Seeking Alpha comment section on MPW, and this is way more hard-hitting, guys. I mean, there are battles going on in the comment section. So the stock has dropped like a rock from 20 to 8. And the question is from here. So is there, the question is back to kind of the topic of the show, generational buying opportunity, or am I buying a can of rotten sardines? To you, David. No, I'm just kidding. But no, there was a transaction there this week in Australia. The bulls are saying it justifies management's case. The bulls are saying that now we have cap rates to go off of these other assets that the plundering short sellers or whatever, the short and distort sellers, who personally I respect very much, none more than Rob Simone. Hedgeye is kind of the main bad guy on the Seeking Alpha comments. Great guy, friend of the show, according to me. So the question to you is, what do you think was clarified by this transaction, and what happens next? I'd love to hear both your takes on that.
So first of all, hello to Rob, because he's a personal buddy of mine as well. We just talked earlier this week. In fact, I was also with Brad Thomas of Seeking Alpha this week in Florida, the other side of it. And so personally, I don't have a horse in the game. I don't own the name. I operate from a very high level. And so I just want to say that I don't have a vested interest in the story. I will say, Jimmy, unless I missed something, does a transaction in Australia have anything to do with cap rates here in the States?
Or U.S. reimbursement policies?
Does what's happening in Australia property operations have anything to do with what's happening here in the United States? Like, I read the press release that they put out, and I almost chuckled when I saw that, because, like, how do you use something in Australia as the proxy for what's happening here domestically? That's like comical, if you ask me. Here's where I focus. The bottom line. If they're all about reducing leverage and reducing debt, then that was a good transaction, because you need to get your leverage under control. More importantly, the issue here is the dividend coverage, because from what I understand, they are not covering their dividend based off of current operations. But then there's a bigger picture here. You have a CEO, a CFO, a C-suite team, a board of directors responding to shareholders, representing shareholder dollars. And I see that chart, and as a shareholder, I would be very unhappy, because the only people that are making money off of this right now is management. Now, granted, management's taken a hit in their compensation because they've seen the stock go from 20 to 8, but they're not losing sleep at night because of what they have in the bank. I have the utmost respect for Rob and the work that he's done on this. And I know that there's bulls out there that will live and die on the sword on this particular example. And I'm sad to say, but I think medical properties has become the new meme stock of the REIT industry, similar to what Ashford Hospitality was during COVID as a meme stock, and that it doesn't take much to move the needle for it to have a roller coaster ride. And as a REIT industry expert who focuses on the transparency of management teams, I personally feel that medical properties has not done a very good job of controlling the narrative as trying to explain to shareholders why, whether Rob is right or wrong, and that's a different conversation, not for this platform, but management has not done a good job of addressing the points that Rob and others have raised to try to control this narrative and turn around this bloodbath, in my opinion. And all you got to do is address the facts, focus on the operations, grow the bottom line. And if this Australia transaction, lowering their leverage, the debt is the first step in fixing that narrative, that's great. However, there's a track record here, and management has a very poor track record of communication and transparency. And so I feel like until they're able to shape that a little bit better, I think this is going to work more in the Bears camp for the long haul than it is going to be for the Bulls camp. That's just my take. Jimmy?
Yeah, I think those are good points. I'll add to it and say that I had a chance to meet the management team pretty early in my career. So this is probably over 10 years ago, when the stock was at about $8. um, One of the things that I think is finally coming to the forefront with some of Rob's work and some of the more deep dives into this, the healthcare sector, but when it comes to hospital systems, is just the complexity of it. When I covered healthcare as a read analyst, this is a sector that has, 4 or 5 subsectors. There's so much, fundamental complexity in the business models and where they get their revenues from and how the leases are structured. We need to keep it simple. And in a bull market, when you can talk about narratives and lease coverage, it works until it doesn't. This is a very, very tricky thing. If you look at Ventas, if you look at the rest of the healthcare space, really since 2017, 2018, there was a period of time when interest rates started to come down, and we saw that cap rate compression from what had historically been much riskier sectors. You look at skilled nursing facilities, you look at hospitals, you look at, just these were 10 cap properties that could not get a lot of financing because they were big ticket purchases. There was a lot of reimbursement risk, and some of our viewers know this from before. But when NNN or when Realty Income, when they structure a lease, you're backing into an unlevered cash flow yield that gives the underlying tenant some breathing room. So depending on the fundamental business of the tenant, if you have a fat gross margin and a fat EBITDA margin, the tenant can absorb some volatility and you can squeeze more rent out of the tenant in order to 1035 their property and give them that capital on day one. When you have an asset class that requires a ton of capital to run, that structurally does a lot of pro bono work, has a lot of lower margins, and you start compressing the yield, right? You're willing to take a lower price and you're putting in an in-place coverage that looks good during a bull market. When that starts to wear thin, if you are running a 10% gross margin business and your revenues go down by 5%, things get kind of hairy. And if you can't cut costs, all of a sudden, that 1.1x rent coverage goes down to 0.9 really quickly. And so there was a reason why historically, when hospital deals are done, they were done with 3x four-wall coverage, 4x four-wall coverage, and they were still, only getting a 10% cap rate on those transactions. So there's a lot of margin of safety that was built in that was gradually eroded towards the end of this cycle. And here we find ourselves in 2023 where, the in-place cap rate for the portfolio, where the market used to value the properties versus the underlying issues that are now coming to the forefront, there's no way for an average mom and pop, Joe, to wrap their heads around that. And so the dividend is really at risk. The business model is at risk. They need a premium cost of capital. And when the management is not very forthright about that, when they try to discount some of these things, it's a long road to rebuild that institutional trust that gives them the capital to go out and do their business model.
I will say from a high level though, love hospitals, love medical office. This is a sector that, is only going to continue to grow more and more, especially as the population ages more and more. Medical office development is a very hot sector right now. And
Of
so
course.
if you think about the hospital plus medical office combo that happens hand in hand, from a very high level, love the story of the sector as a whole, but there's probably better ways to play it. Like I like Physicians Realty Trust personally. I like DOC, DOC. You're going to play medical office. I would personally rather own DOC just because cleaner management team,
How
cleaner
many jets do they
story.
have?
No jets that I'm aware of.
I like jets. I like a management team that likes to fly around private.
They're not offering me any flights. I'm not getting the the succession type of treatment like they are.
Mhm.
So yeah. I'm not getting the Roy family treatment, unfortunately, on the jet.